Hello, good day. Welcome once again to Profitable Forex Trader. I want to briefly appreciate every one of us that commented on my last video and those that liked my last video. Thank you for the love. See, I'm going to give you more by the grace of God. I know that many of us have lost money in Forex and we are looking for ways to make profit to reduce our losses. By the grace of God, that is why I'm here to give you what you need. All right. So if you stick to these channels, you are going to get most of the things that you need in order to be a profitable Forex trader. So I appreciate you all. All right. So if you have not watched my last video, please, I want to admonish you to please go and watch my last video. All right, I'm going to drop the link on the description. All right, go and watch it so that you have a better understanding from where we started, so that we'll be able to flow along. All right, so please don't forget, go and watch my previous video. All right, so we started candlestick analysis last time, and what I said was that to be a profitable forex trader, you need to understand how to analyze the forex market, using candlestick. All right. There are various ways we can analyze the forex market. As well, various ways we can analyze what is happening in the market. All right. So, the prices are being shown by the candlesticks. You know what is happening in the market by the movement of prices shown in the candlesticks. All right. Depending on the kind of chart you're using, some people use the bar chart, some use the line chart, but contemporarily, many forex trader uses candlesticks because it is more informative. It gives you us more information on what is happening. All right, it helps us to really analyze the forex market better than the bar charts and the line chart and every other chart. All right, so it is very, very imperative for us to really, really understand candlestick formation, candlestick patterns, and all that. All right. So last week we looked at the pin bar, and we said that the pin bar, the reason why pin bar is being formed, the way it is being formed, is because of the behavior of the buyers and the sellers. All right, the behavior of the buyers and the sellers. All right, so I'm not going to go. I'm not going to talk much on that. If you want to know more of that, then go and look for my previous video. Like I said, I'm going to drop the link below. All right, so but today we are looking at the doji candlestick pattern. Just as the pin bar is an important candlestick formation, all right, doji is very, very important as well. All right, now there are some traders that trades only pin bar. If pin bar is not seen, they don't trade. In fact, they make the trading of pin bar part of their trading system. Today, I'm not going to talk about a trading system. It's a completely different topic entirely. All right. But later on, we're going to talk about trading system. All right. So why some other people trade doji? All right. If there's no doji, they don't trade. All right. So at the end of this tutorial, that's at the end of the series, you might come up with your own trading system, your own plan, your own rules and regulations on how to trade. And then you might want to make Doji part of your trading system. All right. Now, this is Doji, and there are different types of Doji. All right. This one is called Doji. This one is called Dragonfly Doji. This is Gravestone Doji. Why this is long-legged Doji. All right. You don't have to bother yourself about the names. You don't have to cram these names. What you need to do is to understand the psychology behind the formation of this kind of stakes. All right. Some people will say, there are several names, I cannot memorize these names. Memorizing the names of this candlestick doesn't matter. What matter is the formation, the psychology behind the formation of this candlestick. And this is the psychology behind the formation of this candlestick. Now, let's start with this doji. Let's start with this doji. Let's analyze it and see what happened here. All right. Now, usually For a doji, the price must open, in fact, for all candlesticks, not only doji, the price opens and closes at a particular price level. All right, it opens at a particular price and then closes at a particular price. Right, it can open here and close below, or opens here and close above. If it is a bullish candlestick, all right, it opens below and closes above. If it is a bearish candlestick, it opens um, it opens at the top and closes at the bottom. All right. When you check my previous video, you are going to see more of that. All right. All right. So for this doji, you see the price opened at this point. All right. When it opened here, the sellers pushed the price down to this point. And when it got to this point, the buyers came and pushed it back to where it opened and up to this point. All right. It's like a tug of war between the buyers and the sellers. All right. Or when it opened at this point, the buyers pushed the price up, the sellers came in, pushed the price down, and then it came back and closed at this point. What this is telling us is this: the opening price and the closing price are the same. The price opened, it opened at this price and then closes at this same price at which it opened. So there is no, of course, it moved down, it moved up, but at the end of the period, and this could be at the end of 5 minutes, at the end of 15 minutes, at the end of 1 hour, at the end of 4 hours, at the end of a trading day. It depends on, excuse me, it depends on the time frame that you are using. And it also depends on the kind of trader that you are. Subsequently, we are going to look at the different types of forex trader. All right, different types of forex trader. All right, so the opening price and the closing price are the same. All right, this dragonfly doji is also telling the same story. It opened at this point, the sellers pushed the price down to this point, it came back up and closed at the point where it opened. All right, it opened here and closed here. So the opening price and the closing price are the same. All right, same thing with gravestone doji. It opened at this price, went back up, the bulls or the buyers pushed the price up, it came back down to where it opened and closed at the same price at which it opened. The same narrative. At the same point here, the same scenario here. The price opened here, came down a little, went back up again, came down, and then it closed at the same point. Now, for a doji candlestick, the opening price and the closing price are the same. Look at all the dojis. This doji, the dragonfly doji, the gravestone doji, and the long-legged doji, they all opened and closed at the same price. Now, depending on the location of this candlestick pattern will determine the kind of trade you should take. All right. There's some of us that don't know how to trade this pattern. Some of us, when we see the formation of this candlestick pattern, we just take the price without proper analysis of what is happening, without proper analysis of the location of this candlestick pattern. The location of these candlestick patterns are very, very important. It's very, very important. All right. Now, if this candlestick pattern is located at a very significant zone or area, then it is a very good signal that is given to us, a very good information. For example, if this dragonfly doji, all right, appears or is located on a support level. What is it telling us? That is information. That's how we analyze it. When it appears at a particular um, zone, like support zone, is giving us information. Like I said previously, that this long tail, this is called the tail of the candlestick or the shadow of the candlesticks. And that what it's telling us is this, that the price actually got to this point. The price actually got here, leaving us a shadow. The shadow is telling us that the price actually got here. This one also is telling us the price actually got here, the price actually got here. The price actually got to this point, the price actually got to this point and got to this point. All right. So if these appear on a particular support, what information is it giving to us? The information is given to us is this, because the tail is down, it's not above it. Because this shadow is below. Remember, when the price opened here, it was the sellers that pushed the price down to this price. It was the sellers. All right. Now, when the sellers push the price down here, the buyers at this level were stronger. There were a lot of buyers here. And because there were a lot of buyers here, the sellers did not have enough strength to break through this level. All right. So the buyers came in having more strength. They pushed the price back up to where it opened. All right. And then after probably 1 hour, the price closed at the same point where it opened. Now, having haven't seen that it was the buyers that pushed the price to this point, what is it telling us? It is telling us that the buyers are stronger. Like I said, let's assume this is a 1 hour chart or a daily chart. If for 1 hour or for one day, the buyers were stronger. So what is it telling us? The next hour or the next day, there's every probability, every chance that the buyers could also be stronger, meaning the price is going to continue to go up. All right. Now, let's look at this one as well. Now, this gravestone doji, if it appears at a particular resistance, it is a good information, a good signal that it is given to us. Let's look at it again. The price opened here. The buyers push the price up to this price. But when getting to this price, the sellers here are more. The sellers here are stronger. There are many sellers waiting at this point to buy, to sell, to get into the market at this particular price. But the buyers here were not strong enough. And because the buyers are not strong enough, what happened? The sellers came in and pushed the price down. And eventually it closed. The price closed at the same price where it opened. So the opening price and the selling price are the same. Now, since it was the sellers that pushed the price down and closed at the same point, let's assume again 1 hour or a day, it's telling us that the next hour or the next day, the sellers will continue to rule the market at that time frame, that time period. The buyers, the sellers, will continue to go to sell into the market. So the price will continue to go down until it gets to a zone, it gets to a strong support area where there are more buyers than sellers. That's when the price at that point will continue to go up. All right. So it is the same scenario on all these four candlesticks. All right. Now for this dragonfly doji and this gravestone doji. All right. Now this is the buyers. The buyers push the price up and close where it opened. So there are chances that the price will continue to go up. Now for this, it was the sellers that pushed the price down to close where it opened. So there are chances that the price is going to continue to go down. All right. Now for this one, this doji here is called, another word for this doji is indecision candlestick pattern. Indecision, meaning the buyers and the sellers, they are indecisive at that point as to whether to go up or down, whether as to whether to buy or sell. When this appears, depending on when this where this candlestick appears, if it appears at a particular support or resistance or a particular zone, all right, it's it's telling us that at this zone where it is appearing, the buyers or the sellers are weak at that point. There is no decision made at that point as to whether to go up or down. And so at this point, there's a probability that the price is going to reverse. This is a reversal candlestick as well. All right. Now, depending on the location of this candlestick, all right, if it appears at the support zone, it means that the price might reverse and go to opposite direction. All right. Now, if it appears on a resistance zone, it's also telling us that the price might also reverse and go the opposite direction. Why? Because it is an indecision candle. It's an indecision candlestick. The sellers or the buyers at these particular zones, they are indecisive as to whether to continue going up or continue to go down. Right? I'm going to show us on the chart for better understanding. So the narrative here is the same narrative here. All right, indecision candlestick. All right. Now, if a if you have a trending chart where the price is either trending up or trending down, if the price is trending up and then this appears, let's say three, four, or five of these, let's say two, three, or four, or five of this candlestick pattern appears, it might not appear as a reversal candlestick. It might appear at those areas as a continuation of trend. This might appear as a continuation of trend. All right. Because sometimes many of us, the way we trade, when the price is trending and then there's a little pause, all right, along the line, and then this doji appears, maybe have one of these patterns or two of these patterns. So we think that it is time for the price to reverse and go the opposite direction, not knowing that this the appearance of this is only building momentum to go up. All right, so we must be careful when trading the doji, especially this pattern. We must be very, very careful. If it's on an uptrend, then we know that it's a continuation of trend. All right, of course, it is not 100%. There's nothing that is 100%. So we must analyze it appropriately so that we will not think that it's reversing this end of the trend and it's reversing whereas when it's actually going up. All right. So, depending on where this appears, we can make our trading decision. All right. So, this is an indecision candlestick. That's this doji is an indecision candlestick. If you know how to trade this very, very well, it will really increase your profit. All right. Now, when we are looking at how to place a trade, I think I'm going to explain it better to you. That when this appear on a chart, what to do before you take the trade. All right, I'm going to explain it to you better. All right. But for now, it's just for us to understand the reason why this candlestick is formed and what could happen after this candlestick is formed at a particular zone, not just a particular zone, a very strong zone. All right. It is very, very reliable on a strong zone. Now, sometimes we tend to take our trade on any particular support or resistance zone. No, it should not be. We should look for a strong zone, a strong support, or a strong resistance. When you see the appearance of this candlestick pattern on a strong support or strong resistance, it is very, very reliable. All right. Okay, so let us go to a chart and see what happened. Now, on this chart, we can see some dojis, all right? And we also see what happened after these dojis were formed, after these patterns were formed. We see what happened thereafter. All right. Now let's look at this. Now look at this doji. Look at the dragonfly doji. Remember what I told you previously. Remember I said that now it's the sellers. The sellers usually when they push the price down. You can see it came down. The buyers at this point, with what I can see, my own analysis, there are buyers here based on what had happened here. You see, based on these candlesticks, this is a support zone or support area. All right, so because there are buyers here, all right, the sellers could not push the price down beyond this point. All right, the sellers tried, as you can see this candlestick, they pushed the price down, went back up. The sellers at this point were stronger, they pushed this down here, but because of the strength of the buyers here, the price opened here, came down here, and went back and closed at the same point where it opened. So like I said previously, that there are every chances that when this appeared at a particular support, the price will tend to continue to go up, and that is what happened here. All right, this shadow is showing to us that the buyers were actually stronger than the seller at this point. And let's assume once again that this candlestick is a 1 hour time frame. It's a 1 hour candlestick. All right, so for 1 hour, it was the buyer that won. It was the buyer that was stronger. All right, the buyers were stronger than the sellers. So in the next hours, there are more than 50% chances that the buyers will continue to rule the day, to rule the hours, maybe for more another 2, 3, 4, 5 hours or so. All right, so we can see that on this chart. This is Dragonfly Doji. The buyers were stronger. The buyers won after 1 hour. So we can see the next 1 hour. The sellers tried, but they could not push the price down. The buyers still push the price up, and you can see how it just rallied up to the point where the sellers were stronger than the buyers. Now, if one had taken a trade here, all right, so you can imagine the profit that person would have made. You can just imagine, depending on the lot size that is being used anyway. All right. Now, this is the long-legged doji. All right. At this point, also, the sellers were stronger. The sellers were stronger. So after the appearance of this, like if you remember what I said about this candlestick, I said that this candlestick is another word for this is indecision candlestick. Indecision. You can imagine for 1 hour, 2 hours, 3 hours, 4 hours, the buyers were stronger. The price was just going up. But when it got to a resistance area where there are a lot of sellers, all right, so the buyers became indecisive. Indecisive. All right. The buyers, the price opened here. The sellers came in, pushed the price down. The buyers came in again and pushed the price up, but they could not move further than this. It came down. The sellers pushed the price down again, and then it closed where it opened. So you can see that they were not stronger at this point. They were indecisive at this point. All right, then the sellers, took over the market and pushed the price down. All right, so we can see the appearance of these candlesticks. All right, you can see them. So this is really a reversal candlesticks. If we really know how to wait patiently for this candlestick to appear before we take trades, it will really help us to increase our profit. We can see after the appearance of this, you can see the buyers push the price up, and then we can see this gravestone doji. All right, it was the sellers that pushed the price down here. All right, and let's assume again this 1 hour or 1 day after the formation of these candlesticks, the sellers were stronger, and they pushed the price down. All right, so when we are looking at how to place a trade, I'm going to explain it better to us on how to place a trade. Now, when this appears, we don't just place a trade because the price opens and closes at the same point. You don't just place a trade, all right? You won't don't just place a trade here and say, okay, because the price opened and closed at this point, because the buyers are stronger than the sellers at this point, so I think the price is going to continue to go up. So let me quickly place a trade. No, you don't do that. You have to wait for a particular signal, and the next candle is the one that will give you the signal whether to buy or to sell. All right. So when we are looking at how to place a trade, what to look out for before you place a trade, I'm going to explain it better to you. But for now, I'm just giving to us the rationale behind the formation of these doji candlesticks. All right. This is a dragonfly doji. This is a long leg doji, and this is a gravestone doji. So we can see, all right, what happened after the appearance of this. What happened next? The price went up. You can see what happened here in decision candlestick. You can see the price came down after the formation of this candlestick pattern. You can also see here the buyers push the price up after the formation of this doji. We can also see here after the formation of this gravestone doji, the price also just kept going down. All right. So this doji candlestick pattern is a very, very important candlestick pattern. There are some traders that do not trade, those that do not trade the pimba, they trade doji, they wait patiently. To be successful in forex trading, you need to be patient. you know if you have prepared your trading plan. It's so unfortunate that many forex traders do not have a trading system. They do not have a trading plan. If you do not have a trading system or trading plan, you are going to fail. Right. So if you make trading of doji part of your trading system, and you are patient enough to wait for the appearance of these patterns, and you take this trade appropriately after the formation of this candlestick pattern, it's really going to increase your profit. All right. So I want to believe that this was informative. Just understand what happened. If you have understanding of what happened after the formation of these doji candlesticks, you will know what to do next, whether to take a trade or not to take a trade. All right. So I think that I'm going to stop at this point, all right, because I want to take it step by step. I don't want to rush this tutorial, all right? Don't want to rush. In Forex, you don't rush into taking trades. It is good for us to be patient to learn the basics, be patient to learn everything that we need to learn in order for us to be a successful forex trader. All right. It might take a while, but after you've learned everything that you need to learn, you discover that you are going to become a profitable forex trader. All right. So today we looked at doji, dragonfly doji, gravestone doji, and long leg doji. In summary, In summary, I said that this doji is an indecision candlestick. All right, that if it appears at a particular support or resistance, all right, there are chances that the price is going to reverse and go to the opposite direction. But if it appears on a trending market, either trending up or trending down, it could mean a continuation of trend. All right. Now, for this dragonfly doji, if it appears on a particular support, not just any support anyway, but a strong support, if it appears on a strong support, it means that the price is likely to reverse and go to the opposite direction. For this gravestone doji, if it appears on a strong resistance, like I said, not just any resistance, but a strong resistance, it means the price is going to reverse and go to the opposite direction. Why this long legs doji? It's the same narrative with this doji. It's an indecision candlestick. If it appears on a strong support or strong resistance, reversal is likely to happen. If it appears on a trending market, it could be a continuation of trade. All right. So if you have any question, you can ask on the comment below. If you have any question, contribution, just indicate, and by the grace of God, I'm going to reply your, I'm going to respond to your comments and answer your questions. All right. So next time we are going to look at this candlestick pattern, bullish engulfing and bearish engulfing candlestick pattern. They are also very important. All right. So I want to believe that, all right, this tutorial was informative and educative. All right. Please do not forget to like this video. Do not forget to subscribe. If you subscribe, when my next video is being uploaded, you'll be among the first that will get it. All right. Please support this channel by liking and subscribing. If possibly, if you can share, also share it. All right. I wish you all a blessed day. I wish you all a profitable trading